All right, now it's well past the time when you should have started getting to work on your tax filing for the financial year ending March 2025. And remember, the deadline was extended to beyond the end of July, but then it's only till the mid of September, so you better get started before it's too late. The days and the months can go by in a flash. So let's talk about what you need to know. Joining me in studio is CA Abhishek Mehta. Abhishek, thanks so much for taking the time.
Thank you so much, Alex.
Let's talk about that. When is the last date to file the return?
So earlier it was 31st July. Now the extended timeline is 15th of September for non-audit cases and 31st of October for audit cases. That's why you have to file your income tax returns.
And most people are non-audit cases,
yes,
right?
Yes.
Give me a few examples of audit cases.
So if somebody has a turnover of more than 10 crores or probably somebody has an F&O transactions which are worth more than 2 crores. So in that cases only the audit gets applicable, where you have to get your books audited by a chartered accountant. So 99% of the cases will fall by 15th of September. Don't wait till last moment because the server gets, a little bit jacked up. So you have to file your returns as early as possible.
So, but tell me, why was the deadline extended from the end of July to mid-September?
Because there were major changes in the ITR forms. Rather than simplifying it, now they have complicated it a bit. They have asked for more information. Earlier, what used to happen is, if you wanted to claim your HRA, you just had to input your number. Now you have to give your entire explanation of the HRA. What was your HRA component? How much rent did you pay? And in the entire mathematics has to go in the HRA calculation. Even for your medical insurance, you have to put your date, when was the payment made, when did that policy came, what was the policy number. Each and everything information has to go. So income tax has extended the number of disclosures which they want while you're filing your income tax returns and claiming the deductions.
Wow. So does that make your life harder or easier?
In terms of revenue, easier. In terms of filing, difficult.
More difficult, okay.
Yes.
All right, let's talk about some of the consequences of not filing. And I think a lot of people, particularly when they're starting out, tend to, actually before that, let's talk about who has to file. Because there are carve-outs as to who has to file and who doesn't have to file. If your income is below a certain threshold, you don't have to file.
Yes.
Right?
A lot of people, in fact, think that if I am not paying any tax, like all my refunds are, all the tax which I have paid is already deducted, I don't need to file. But that's not the case. If your income is more than 2.5 lakhs in a year, you have to compulsorily file your returns. If there is a senior citizen in the age of 60 to 80, if his income is more than 3 lakhs, he has to file the return. And if the income is more than 5 lakhs for super senior citizens, which is 80 plus, they have to compulsorily file their income tax returns.
Okay, and it's a good, so, and those that are below those thresholds can still file the returns, right?
They can still file the returns.
As a matter of course, as a good practice.
Yes, yes.
As a good practice. Okay, and would you recommend that? Would you say that's a good thing?
Because if anybody wants to take a home loan and anybody wants to take a credit card, I think ITR is one thing which is required everywhere. Even for visas when we apply, you need your ITR forms.
So you're creating a record of income having been generated.
That's right.
That's good. Let's talk about the consequences of not filing, because I think particularly young people below a certain income threshold will say, oh, it's okay, it's just 1 year.
Yes.
What are the problems with not filing?
So there are 5 key problems. The first problem is there will be a penalty of 1,000 to 5,000 rupees if you file your returns even after 15th of September.
Right.
Second will be you have to pay additional interest of 234A if there is any income tax which is
section 234A.
Payable. Yes. So you have to pay more taxes in the income
interest
tax
on
amount.
What?
On the tax which is about to be paid. If you have skipped something, what is happening usually for salaried employees, the tax is getting calculated at the employer level.
Tax directorate source,
the capital gains, the interest income, the dividend income, all this is getting skipped. So that you have to pay tax on all those things. So you will have to pay additional interest on those components as well if you don't file your return. Third thing will be, if you don't file your return, income tax department will do a self-scrutiny and will do a self-assessment of your taxes. And if there is any underreported income, there will be a penalty of 50% to 200% on that income. Fourth thing will be, in very rare cases, they also go for prosecution. 3 months to 36 months is the jail time for non-filing of income tax returns. Fifth and foremost, the most important, you lose all your carry forward losses. In case you have any losses, whether it is business profession, whether it's capital gains, And if it is of capital losses, if it's of this year or even of earlier years, you lose your carry forward if you don't file your return on time.
Oh, wow. Okay, just by the way, in case you were wondering about those capital losses, we've spoken about it in past conversations as well. There is a term that is used, which a lot of people tend to use and a lot of people are familiar with. It's called tax harvesting. It's when you have a loss in a particular asset and you book those losses and you can set them off against future gains that you might make in subsequent years. Of course, there are rules about what you can set off against what. Short-term capital losses can be set off against short-term capital gains and long-term capital gains. However, long-term capital losses can only be used to set off against long-term capital gains going forward for a period of 8 years?
8 years,
8
yes.
years.
Yes.
Good, I remember my rules. Let's talk about what has changed this time around and what are the forms that are available. So first of all, who has to go for what form?
Yes. So in total, there are 7 forms. We'll skip 5, 6, 7 because those are more for corporates and trust and other institutions. ITR 1 and 2 is mostly for the salaried individuals. Yeah. If somebody doesn't have a capital gain or other things, rental income, they can go for a simple ITR, which is ITR 1. For people who have capital gains, interest income, there are different set of other income as including the salaried income, they have to go for ITR 2. Then there is ITR 3 and 4 where your business and profession people will have to file their income taxes. Between ITR 1 and 2, if somebody has a F&O gain, they will not fall under ITR 1 and 2. They will have to compulsorily go for a business and profession income tax.
Even if they're salaried?
Even if they are salaried, even if there is a 1 rupee gain or 1 rupee loss. F&O is a speculative income and you have to compulsorily file it under business and profession ITR. A lot of people make this mistake and then get a scrutiny notice.
Wow, okay. So even if it's 1 rupee, and hopefully there are people who have actually made some money trading F&O. A lot of people, as you know, have not.
Is one of them.
A lot of people have lost money, as you know. All right, so you know now which form you have to go for, but there are a few changes, as you mentioned, in the ITR forms. Can you talk about some of that?
Some of them are basically if you are claiming a deduction, like if you're claiming a NPS deduction, you have to compulsorily quote your NPS number. If there is a Mediclaim, like I said, you have to quote your policy number, the date of payment. Same goes with insurance policies. Same goes with your political donation or even your HRA calculations. Everything has to be given in a very detailed manner.
So for HRA, how are you going to prove it? You need that the rental agreement document,
So they are not asking for the rental documents right now, but what they are doing is they are asking for the calculations. What earlier people do is they used to match it with the amount of refund they wanted. So if somebody's salary is 10 lakhs, their HRA component was actually only 3 lakhs.
And but they were claiming more.
Claiming 4 lakhs, 5 lakhs, just because only a number they had to input. So they used to input that number. Now it's not the case because in Form 16, your entire HRA component is showed.
But shouldn't employers be capping that based on your salary?
Yeah, so employer will do the calculation. What people do is if they don't have those documents, they declare it at the time of return filing.
Sure.
So that's where they try to skip it.
Okay.
If the employer has already done it, then you don't need to give much more information. But if your employer has not deducted and you are trying to input it while filing the return, then you need to give all those disclosures.
So just to be clear, I mean, normally when you're an employee, your employer at the start of the year will ask for declarations.
Yes.
If you've given that declaration in January when you've been asked for proof, if you've given your proof, then you don't have to do it. This is not applicable to you.
But if
you've missed that and now you want to recover certain taxes that have been deducted at source, then you need to have all of the details. Okay, so that's clear. Anything else?
Nothing.
Okay. Okay, now there are a couple of documents that you need to follow. Of course, Form 16 is now out and that's your primary document that you look at, but there are a couple more. There is the annual income statement and there is the total income,
taxpayer information statement and annual information statement.
Right.
Income tax has come up with 2 more statements, which is AIS and TIS. Consider this as your entire Google of your financial information.
Okay.
So everything you do in your journey of that one financial year, everything will be available on the AIS desk. There are 5 key things. The first and foremost is the SFT, which will go in detail.
What is that?
specified financial transactions. So all bigger institutions have been told that if some certain thresholds are crossed, they have to report those transactions to the income tax department. For example, if somebody has deposited cash for the credit card payment, if somebody has done even credit card payment in white, but the credit card payment is above a certain threshold, that will be showed. Your foreign remittances, your cash deposit in the bank, your dividend income, your interest income, your mutual fund transaction.
And what happens with all of this?
All this information is gathered. So none of the capital gains or gains which you have made, income from other sources in your entire financial year can be skipped, because all things in detail are captured in the AIS. And if you file your returns which are not matching with the AIS, there is 1.62 lakh people have got notices last year where there was mismatch between their AIS and the income tax returns which they have filed.
So pay very close attention to this. And so therefore, how do you, as an example, you've gone out and swiped your credit card, is a large purchase that you made. How do you explain that?
So usually how it is explained is, if I have done a credit card transaction of about 30 lakhs, what people do is...
You're talking about that side,
because what people do is, when we are going for foreign travel also nowadays, we are not using, if you are making a payment on MMT, you will just swipe your card of 10 lakhs and, and there is this Gen Z going on credit card points. So a lot of people are, trying to gather those points, and they don't know a lot of points are gathered at income tax level also. And those points will haunt you back. So whenever you're doing a lot of credit card transactions, your income has to match in a proportionate manner. So it cannot happen that I'm filing a return of 5 lakhs and I've done a credit card transaction of 30 lakhs. So that disproportionate way will get captured. Even your property purchases are getting captured. So if you bought a property of 1.5 crore, but in the last 5-6 years, you have just shown a total income of 50 lakhs. So there's a disproportionate amount, and that's getting captured by the department.
And the ultimate outcome of this conversation is exactly that. There is more scrutiny and there is more digital trail of everything that you're doing, and everything needs to match. So thanks so much for coming in and for explaining all of this to us.
Thank you so much.
Pleasure having you.
Thank you.
And by the way, there's still more that you probably need to know about. And so if you've got specific questions, be sure to write to us in the comment section and we'll take it up in future episodes. There's still time for you to file your returns. That brings us to the end of this edition of Your Money Matters. Thanks so much for watching. This is NDTV Profit.